Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, September 21st. It's 6:40 in the 6:40 a.m. as I'm starting the video. And as always, please run your player at 1.25x to plow through this material a little bit quicker. Taking a quick look at markets, the main commodities, oil, copper, natural gas are up about 1%. S&P and Nasdaq futures are up about 0.8%. Small caps 1.25%. The Nikkei's up 1.7%. Gold's up a little bit. Silver's up a little bit more. The VIX, when I looked, was sitting right around 23. After the bell tonight, earnings, we've got FedEx, which will probably be kind of an important one to watch. Remember, we've got a bracket trade set up on UPS that will probably filter through to that based on what FedEx says. Adobe, and then Stitch Fix, all after the bell. Macro. We've got a housing start number, we've got Redbook, and then we've got the start of the FOMC rate decision meeting today. That'll culminate tomorrow with a statement at 2 p.m. and Jay Powell presser at 2:30 p.m. Last night we had a home builder Lennar report. They traded down a little bit after hours based on their Q4 outlook being softer than expected. And then here this morning, D.R. Horton, ticker DHI, came out with kind of a similar thing, that supply chain disruption, the standard line we've got now, is going to hold them back in Q4 as far as building the number of homes that they thought they could build, and now that's going to be down a little bit. So may want to watch the home builders a little bit today. Lots happening yesterday, obviously. So let's take it from the top and see where we're at heading into today. Now, normally I would say, when you're heading into an FOMC meeting like the day before and leading up to the day of the announcement, the market tends to go flat or in levitation mode, where nobody's really anxious about piling on risk, and they just okay, let's run out the clock until Jay Powell tells us what to do. Now, in this case, we hit a VIX in the 28s yesterday. Now we're still at 23. So there's added volatility in the system, and I think there's the potential today for some more active two-way trading than you would normally see heading into the FOMC. Now, I could be wrong and it just trade sideways for a day and a half, but I think with the VIX elevated at 23 right now, that there's a good chance of some more dramatic moves than you'd normally expect the day before an FOMC. So starting with the 10-year, I thought it was interesting yesterday that with the down move in equities, there wasn't really a mass exodus into bonds. So we did have a pullback in rates, but this type of move we've seen just on any random given day here, in the last few months. So I wouldn't read a whole lot into this. You can see here that I've got it marked now that between 1.3 and 1.4%, I more or less consider the sweet spot for yields. If we were to drive higher in yields, I think that would favor the cyclicals, banking, reopening type trades. If yields crater, then it favors tech, the bubble names, ARC, etc. We've pretty much beat that to death. I've redrawn TLT a little bit here this morning. I've boxed in the majority of the trading that's been going on for the last couple of months. We've got a pretty well-defined band between 152 and 147 with a midpoint around 150. So, we're in the upper half. I think unless you're a bond trading sharpshooter, look for moves outside of the box, or if you want, you can get short at the top of the box with a stop just above and look for a move back down. But in general, I think you'll see more dramatic type moves once this trading range is either broken to the upside or the downside. Now let's look at the VIX. We had the gap up in VIX yesterday, opened it around more or less 24, and actually I didn't see it hit 29, but it got pretty darn close. I thought it was in like the 28.50 range, but it got up there pretty good yesterday. And now, as they bounced it into the close, they drove down the VIX quite a bit into the 25.50 range. And now then this morning, with the overnight continuation of the bounce, then we're back down here around 23. We'll have to see where we open. But then there'll be a gap, right? So we would have closed last night at 25.71, and then we open around 22, let's just call it 22.50 or 23. There'll be a gap to fill. And you can look back in the chart, and when there's a gap in the VIX, it gets filled. So there'll be an overhead gap in the VIX, which, if and when it gets filled, that would probably accompany a down move in equities, right? If we have a VIX at 22 and then it rises to fill that gap back up into the 25s, then equity prices are probably heading down. And don't forget, I just wanted to make note of it, we still have a rising momentum trend in the VIX. So even though we were plowing along the bottom, you can see that momentum in the VIX was rising. So longer term, what you of course want to see is the VIX roll over in terms of momentum, and then have momentum coming out of volatility, and that would give us a lot of confidence in a rising equity trend if volatility momentum really rolls over. So let's take a look at our momentum oscillators. This is NYMO, the NYSE oscillator, and you can see we're down here at minus 51, not really in the range of calling it outright oversold, but relatively close. And you can look back in time and see that we have had reactions down in this range before. So whether we get down to minus 60 or beyond or not is obviously going to be tied to whether the bounce that we're seeing this morning ends up being a durable bounce, like a one and done, like yesterday was the low, and then they just V bottom and ramp right back up to the top, or that was just a reflex bounce that maybe after Jay Powell's announcement comes, it rolls back over, or even today that could happen. So the posture of NYMO is heading down, not to the point where I'd say oversold, but on its way. Now, looking at the Nasdaq, we're only down at minus 33. I wouldn't even call that predictive. More or less in the middle of the range. You know, if we had a bad day or two, yeah, we'd be down in the minus 60 range, minus 90 range. But we'll just have to see where that stands after we see how this bounce and this corrective action plays out. Taking a look at our equal weight SPY, you can see that Friday we had lost the 50-day, and then of course the gap down. Notice that the tail of the candle came right down to our 148 level that we had on the charts. Got a bounce later in the day. Still have a gap to fill here. Like I say, you're probably not trading this, but I do think it's good to watch from the standpoint of, I think the key now is, filling the gap to the upside and then recapturing the 50. I think recapturing the 50 will further validate a one and done V recovery, back on track kind of thing. And then using that 50-day moving average as a bull bear pivot going forward. SPY daily. We had the nice uptrend. We were near the top of the channel. Then we lost the midpoint. Then we lost the lower part of the channel. Then we dropped down. And then yesterday's gap, we lost the 50 EMA in green. We took a deep look down to that 428 area, I think was the low. Yeah, call it 429 down here. And then got the bounce into the close. And so today, with the overnight move of nearly 1%, we're going to have a kind of an odd dynamic that'll play through all of the indexes this morning. And what I mean by that is we're going to open like totally out in space here. From the standpoint, we're going to have an unfilled gap above, and then we're going to have the gap from the morning, from this morning, if the pre-market gains hold, then we'll have a gap below. So literally wherever price opens, we're going to have gaps both above and below price. And then that makes for some really tricky trading from the standpoint of you don't really have a benchmark level to shoot against until price makes a move one way or another and comes into one of these levels that we've got marked here and either shows it can take it out, recapture a level from below, or lose a level from above. So it's going to be really tricky. What I've done here on the SPY 2-hour chart, and I've done this all the way through, is I've dropped in, I've got it in brown here, the Fibonacci retracement levels. So we make an impulsive move down, marking the low, and now we're traveling on the way back up and the bounce, and we're looking for a place we're looking for a level to shoot against that where we can get an objective trade location where we can reasonably place a stop. So, and what I like to do on the fibs, I find them much more powerful when they align with technical levels on the chart rather than, just out in space somewhere. I find them less reliable. So in this case here on the SPY 2-hour, we can see that the 38% bounce aligns pretty well with this 436 level. And then the 50% retracement aligns pretty well with the 438 level. And then finally, the 618 retracement is coincident with the 50 EMA. So, and then we, of course, have the top of the gap. So again, I took a look pre-market, and SPY was in the 438, 439 area. So let's just run through a scenario. It opens at 439. The bulls look like they want to take charge. They drive it up, but then hit the 618 retracement level along with the 50, and price stalls and it can't get through. And you see that on the chart, and you want to try to take an objective short if you're an active trader. And then we see how far it may cycle back down. Because remember, we're going to have a gap from 434 up to wherever it opens. So there's going to be a lot of open space in here for price to move around. And so let's take another example. We power through the 50, come up to fill the top of this gap, but then it stalls here and rolls over, or it breaks out. So at these levels, bottom of the gap, intermediate levels, 50 EMA, top of the gap, prior support becomes resistance. We've got some pretty distinct levels on the chart that align pretty well with the fibs and with the lateral price resistance as price goes back up. And just to keep it square in your mind, recapturing levels from below is bullish, losing them from above is bearish, and always try in an active trade to pick an objective trade location. This does not give a lot of extra color, just gives you a blow up of the levels. Here we've got the swing high and the swing low, and these fib levels aligning really well with the levels marked on the 2-hour chart. I've got the 50 EMA on the daily marked right here at 440.20. So today, if price were to recapture the 50 EMA and hold it, that would be a really nice level to shoot against on the long side. Anything north of the 50 I regard as bullish. Doesn't mean it can't go up and then reject somewhere, but by and large, recapturing the 50 from below is going to be a nice bullish technical event. Now, moving on to the Qs, we had the gap down. We're currently under the 50 in green, and then the exact same discussions are going to apply for Qs as they did for SPY, in that we're going to have multiple gaps on the open because, the Qs are going to open higher if the pre-market action holds. So I've got the top of the gap at 373.42. Obviously a recapture of the 50, and then a recapture of the top of this gap would be bullish. And notice that the 20 EMA in navy blue pretty much coincides with the top of that gap, and then that would be a nice bullish technical event there as well. And you can see it here. I just lost my 2-hour chart. We can see here on the 30-minute charts, same thing. Got the fibs dropped in. We got the big opening gap from yesterday. We'll have an opening gap from this morning. And then we've got the fib levels dropped in as well. So I think today the key levels on the Qs are going to revolve around 369, which was the bottom of the opening gap yesterday. This 371.70 area, and then the top of the gap, and then reclaiming this big volume over price bar here at 374. IWM had the gap down, big gap yesterday. They ramped it up at the close, and so again we're going to have a gap higher, and so we'll have gaps both above and below price. I mean, at this point, I would love nothing more than to have this kind of rollover for a test of the 200 and the bottom of the box yet again. And I think that would, if the Qs and SPY also roll over, like get everything oversold and then take a long position at the at key support like we did the last time around. I mean, and then we got great trade location on the not only on IWM, but whatever you happen to be trading. And we got this big power move back up here. Here kind of in the middle, I mean, yeah, we're going to manage, but it's not going to be as clean a setup as, everything oversold at support down at the 200. I mean, that's kind of a no-brainer try at a long. Even if it doesn't work, it's like that's where you got to get long when everything's oversold at the 200 at key support. I mean, if you weren't going to get long there, I mean, you're just not going to get long because I mean that's as good as it gets right at that point. So let's watch that. Here on the 2-hour, got a little blow up. Remember, on this chart, the gold EMA is the 50 on the daily. So as we make our way back up, we've got a level here at like 217.75. Got something at 218.50, 220, 222, etc. It's been the same darn levels that we've been dealing with the whole time. Nothing really new there. We will again have a gap below and a gap above when we open the day if the pre-market holds, and you can see how the levels line up with the fib retracements. I think those are the key levels that you can use if you're trying to actively trade the indexes. Before we get into FATMAAN, let me welcome any new visitors to the YouTube channel. I really appreciate your time. I think of what you'll find if you're an active trader, that having the levels that I pick out for you will be very helpful. I think over time you'll learn to trust them, and then instead of focusing all your efforts on where are the levels, you can focus your efforts on execution around those levels, because honestly, trading is all about execution. You can have all the proper levels you want, but if you can't execute the trade properly, if you get flustered or get knocked off center psychologically, you'll make mistakes. So what I endeavor to do here is provide you with good levels that you can trust, and then help you with the execution around those levels, the thoughts that you should have in your mind as you approach the day, to help in your execution. So if you think that's going to be beneficial to you, please hit that subscribe button and the alarm bell, and then jump over in the show notes. You'll find a link to register for all my content, and that way you'll be on the mailing list, and you'll get my content morning, noon, and night. Whenever I send something out, you will be sure to get it in your inbox. I would appreciate that. And longtime listeners, thank you so much. Please pass the link along to people in your trading circle and help me to continue to expand the channel. I really appreciate it. Fat Man, starting with Facebook. Gap down, worked our way down through the levels, found some support here at 351 or so, and then we got the big bounce. We've got some pretty big clear levels going back up. I haven't dropped the fibs in, but you can do that as well. But we're going to have a level here at 360, 362, 364, and then we've got this downtrend line to contend with. So, you can actively trade this bounce going up this way, recapturing level by level from below. And then here, I believe, is going to be a key spot to break above the downtrend line, and then break above this 368.50-ish area. And then that would get price back on the right side of this whole trade. Because right now, all this here looks like a fake breakout. A, double top. Comes down here, fails support, quick move down, fails support again, and down we go. So I think getting back above this 368.50 is going to be paramount for Facebook to get back on track. Apple, pronounced downtrend, series of lower highs and lower lows. So now to get back on track, price has to recapture this 144, has to fill this gap, break the downtrend line, and then break back above 146.50 to get a little bit more secure footing. Notice the range of value marked by the volume over price bars here. So where a lot of trading has taken place. So getting, we're below value now. That's where you see these voids. And to recapture the value range, once we break above 146.50, then you can mark that as support there and look for price discovery in this value range, and work around in here in these levels. And then when you get a breakout above value, which will be right here at around I would actually call it like 150.5, that lines up with this level right here, then you would get a breakout into the upper range. So a lot of work to do. There's definitely been damage done to the chart. As you can see, we are in a downtrend, and you've got some really nice levels to shoot against today when you're trying to actively trade it. Tesla, from a technical standpoint, was absolutely perfect. Yesterday, we talked about 740 being a pivot level, and price gapped down. It opened a little bit below, looks like 735. Then it had a reach up candle right to 740 and then rolled over, and it came right to the pre-identified line in the sand that we had from this prior low and from all these resistance levels. So, I mean, this is a good chart to illustrate price has muscle memory. It remembers prior locations where it's been. That broken resistance becomes support on the way back down, and it remembers where it was. The buyers step in there and pop it up. So today, I probably should have moved these arrows, but as long as price is above 720 today, I think you can stay long, and a definite level to buy would be a recapture of 740, and then you can look for 755, 760 on the top side to fill this gap. Microsoft had a lot of movement yesterday too. We had the gap down. We lost this key level here, and price proceeded to find the next level of support, and then it bounced right back to this key level and stopped here right above 294. So I think today 294 is your pivot. I wouldn't be surprised if there's a little gap up today on the open. If you were to get say it opened up at 296 and then they faded it back into 294 and that held, that would be a great objective long to give a try at Microsoft, because you would have opened above and then come back into this key support area, and then that would give you a very objective long. And by the same token, if it were to come back and lose this level, then you're most likely looking at a back test of yesterday's low at some point. And you can use that thought process on the rest of the indexes and whatever you're trading. If we trade higher on the open and then come back and lose yesterday's close, the closing level, then that's bearish, right? We don't want to lose yesterday's close. That would open the door to retest the prior low. Amazon. We had this one pretty well lined out as well. At least we had the levels. We had we had the gap down, and then once we lost this prior gap support at 33.70, then it came right down and tagged this 3,300 level, which we said was a key level, and then it bounced. Now, got a lot of purple going on. I want to just clarify to anybody that's new here what's going on. The larger box right here is a big gap left from the last earnings call. So we were trying to fill the gap, and it rolled over before it got there. And so now we've moved down, and then yesterday we had a gap within a gap. So these are the key levels that price needs to reclaim on the way back up. And then, of course, this morning, if the pre-market activity holds, you'll get a little gap on the open. So lots of moving pieces there. Do your best, if you're into trading it, that you shoot at a line in the sand where you can get an objective entry. Here too, on Google, I think we had the levels properly laid out, you can see after the gap down, once it got into this 2760 area, that we had a lot of reach up candles that came back to that level and were rejected, so that's more validation that that level is real. And then we came down to get this final support level at 2730 that we had marked. Note, we had a couple of candles reach down to that level. And, if you were actively trading Google, you probably would be on, a 5, 10, 15-minute chart. And that's where you'd see like multiple candles sitting on 2730. And if you were inclined to take a long, that would have been a very objective place to do it. And then when it came up and broke out here, then that would have been a buy as well if you were interested in that. So today we've got this big gap to fill up to 28.15, and then if it can eclipse that level, then we get back on the right side of the chart, more or less at the lower end of this big value band up here. Netflix. We didn't even have a gap yesterday, so that was unusual. You can see that we had a previous close at 589, and we had a high of 591. You see that right here. So it actually kind of gapped up and then failed and moved back down. So there was definitely an opportunity there if you were all dialed into it, which you probably weren't. You were probably more concerned with the indexes and all that kind of stuff. So you lost 590 from above. That's a sell. You lost 584 from above. That's a sell. You lost 575 from above. That's a sell. And then it found support at 570, which to my mind was unusual because we had this big void here, and I would have expected once 575 broke that it would make a quick move down to 560. Really didn't get that. So the levels are very clear. The buy points on the way back up if we were to get that today. And then wrapping up with SMH, gap down, came down, lost this second level breakout that we had at 262, came down a little more on an overshoot, and then rallied into the close. So for today, I think the levels are 265, 266, and then 267 levels to grind up through and get into this gap and fill it. So today's going to be a really interesting day for the reasons that I've stated so far, with the FOMC on tap for tomorrow, but coupled with elevated volatility, a gap in the VIX, a gap up this morning. It could be a really, really tricky open. And what I want to communicate to you is, when things are, triple tricky, as it were, if you're not really dialed in to what you want to do and have confidence in that situation, sit back and let there be some price discovery until price finds a level, either higher or lower, that you feel comfortable with, that you know there's a line on your chart, a level on your chart that's important, that price has found, and then it's a matter of, does that level hold or break out? How does price react around that level? And if you can get that either on the high side or the low side, then you can be pretty confident that you've got an objective trade. So I think this is a day to be careful. I wouldn't. I usually get cautious before the FOMC, and with the VIX at 23, and with the indexes all below their 50-day moving average, I don't think it's a particular day to load up on risk ahead of the FOMC. More or less, probably active trading today is going to be your best ticket. Now, if you get a big whoosh on something you really want, yeah, you can step in. Just make sure you got your time frame in mind, and that you're not worried about whatever Jay Powell may say tomorrow afternoon. So let's leave it there. This has been Chris Buss with Traders Profit Compass. Hope you have a good day of trading, and talk to you next time.